The IRS quietly sent out a new round of warning letters this year, and if you are 60 or older and collecting Social Security, have a savings account, a checking account, or even a simple CD at your bank, you need to hear this right now. Because some of the people receiving these letters have no idea why they got one, and some of the people who should have gotten one never did, which means they are in even bigger trouble without knowing it. I am going to walk you through exactly what these letters are, which 5 types of accounts triggered them, what you are supposed to do if one shows up in your mailbox, and how to protect yourself from penalties you should never have to pay in the first place. Stay with me through the whole video because near the end I am going to give you a simple 3-step checklist that could save you from a surprise tax bill this year. That checklist alone is worth your time. Now here's why this matters so much right now. The IRS has been given more funding and more staff in recent years, and they are using that to do something very specific. They are matching bank records against tax returns. That means if money moved in or out of your account and it does not line up with what you reported or what your bank reported, a letter is coming. And for seniors living on fixed incomes, these letters can be terrifying, even when the issue turns out to be something small and fixable. So let us go through this together. Calmly and clearly, the same way I would explain it to my own mother or father sitting right here at the kitchen table. The first type of account that triggered IRS letters this year involves interest income from savings accounts. This one surprises a lot of people because the amount seems so small. You put your money in a savings account, maybe a high-yield online savings account, and you earn a few $100s in interest over the year. You think, that is barely anything, why would the IRS care? But here's the thing. Your bank files a form called a 1099-INT with the IRS every single year. That form tells the IRS exactly how much interest your account paid you. If you earned $10 or more in interest, that form gets filed. And if you earned interest but did not report it on your tax return, the IRS computer flags it automatically. This year, with interest rates being higher than they have been in over a decade, many seniors who never worried about interest income before are suddenly seeing much larger numbers on those 1099-INT forms. If you were earning 0.25% on your savings 2 or 3 years ago, that was almost nothing. But if you switched to a high-yield savings account that was paying 4 or 5%, and you had even $20,000 in there, you may have earned $1,000 or more in interest. That is taxable income. And if you did not include it on your tax return, the IRS noticed. If you got a letter about this, do not panic. This is one of the most fixable situations there is. You may simply need to file an amended return, which is called a Form 104-0-X. Or in some cases, your tax preparer can help you respond directly to the notice with documentation. The IRS phone number for individual tax questions is 1-800-829-1040. If you received a notice, that notice will also have a specific number or letter code on it. Look for it in the upper right corner of the letter, and you can reference that code when you call. If this is hitting close to home, take a moment and hit the like button on this video. It helps more seniors find this information when they need it most. I put this together because I know how stressful it is to get an unexpected letter from the IRS, and you deserve to understand exactly what is happening and what to do about it. The second type of account involves certificate of deposit accounts, what most people call CDs. A lot of seniors put their money in CDs because they are safe, they are predictable, and they pay a guaranteed interest rate. That is smart money management. But here is where people sometimes run into trouble. When a CD matures and you roll it over into a new one, the bank still reports the interest you earned to the IRS. Even if you never touched that money, even if it just rolled right back into a new CD automatically, the IRS sees that interest as income in the year it was paid, regardless of what you did with it. So if you have been rolling over CDs for years, and your tax preparer has been diligently reporting all of that interest, you are fine. But if you assumed that because you did not actually withdraw the money it did not count as income, that misunderstanding could be behind a letter you received this year. The fix is the same. An amended return, or a direct response to the IRS notice with your documentation. Your bank can give you copies of your 1099-INT forms going back several years if you need them. Just call the number on the back of your bank statement or log into your online account and look for tax documents. The third account type involves money market accounts. These are similar to savings accounts, but they often pay slightly higher interest, and they are held at banks or at brokerage firms. The important thing to know here is that money market accounts at brokerage firms sometimes generate 2 different kinds of income: regular interest and something called dividends from money market funds. These get reported differently on your tax forms. Regular interest goes on a 1099-INT, dividends go on a 1099-DIV. If you or your tax preparer missed one of those forms, that is another reason a letter could land in your mailbox. This is especially common when seniors have accounts at multiple institutions. Maybe you have a checking account at one bank, a savings account at another, and an old brokerage account from years back that you mostly forgot about. Each of those institutions is sending tax forms directly to the IRS. If any one of them does not match your return, the computer catches it. So if you have accounts spread across multiple places, now is a good time to make sure you have gathered every single tax form from every single institution before you file, or to check that your tax preparer did. Before we move to account number 4, write this down if you have a pen nearby. Every January and February, check your mail and your email carefully for tax forms from any institution where you hold money. Banks, credit unions, brokerage firms, online savings accounts, all of them. Do not file your return until you have every form in hand. That one habit alone will prevent most of the letters we are talking about today. The fourth account type that triggered IRS letters involves joint accounts, and this one is particularly important for seniors. A joint account is one where two people are both listed as owners, often a husband and wife or a parent and adult child. When you have a joint account, the interest income gets reported to the IRS under the Social Security number of whoever is listed first on the account. But here is where confusion happens. Maybe the account is listed in your adult child's name first. Maybe they are reporting some of the interest and you are reporting some of it. Or maybe nobody is reporting it correctly because everyone assumed the other person handled it. The IRS does not divide joint account income automatically. It goes to whoever's Social Security number is first on the account. If that is you, you are responsible for reporting it, even if your adult child uses the account just as much as you do. If you have joint accounts with family members, sit down with everyone involved and make sure you all know who is claiming what income. This is a conversation worth having before tax season, not after a letter arrives. I also want to mention something that comes up often with seniors who added an adult child to their account for convenience, maybe so the child can help manage finances or pay bills. In those situations, the parent is often still the primary owner, but the child's name and Social Security number may now be attached to the account. Make sure everyone is clear on how the interest income is being reported and by whom. Share this video with a family member if any of this sounds familiar. I am not exaggerating when I say that a simple conversation about joint account reporting could save your family hundreds of dollars in penalties and a lot of unnecessary stress. The fifth account type involves something that many seniors do not immediately think of as a bank account, and that is an online payment account or a peer-to-peer payment platform, things like PayPal, Venmo, or Cash App. Now, before you say you do not use those, let me explain why this still might matter to you. If a family member pays you through one of those apps, say a grandchild sends you birthday money, or a family member pays you back for something, and those payments add up to $600 or more in a year, the platform may file a tax form reporting that income to the IRS. It is called a 1099-K. The rules around 1099-K reporting changed and have been adjusted several times in recent years, so the exact threshold that triggers a form has shifted. But the key point is this. If you receive regular payments through any digital platform, even from family members, and those add up to meaningful amounts, it is worth mentioning to whoever prepares your taxes. The IRS does receive reports from these platforms, and any mismatch between what they reported and what is on your return can generate a letter. Now let us talk about what to actually do if you received one of these letters, or if you want to make sure you never do. The most important thing to know about an IRS letter is that ignoring it makes things worse. Always. Every time. The IRS sends notices with deadlines, and if you do not respond by the deadline on the notice, the matter escalates. What might start as a simple request for information can turn into a tax assessment, which means the IRS decides what you owe without your input, and that is almost always more expensive than just dealing with the original issue. When a letter arrives, here's what you do. First, read it carefully and find the response deadline. It will be clearly stated in the letter. Second, find the notice number in the upper right corner of the letter. Common ones you might see are CP 2000, which means the IRS found income that does not match your return, or CP 14, which is a balance due notice. Third, gather your documents, specifically the tax forms from whatever institution is at the center of the issue. Fourth, respond before the deadline. You can respond by mail using the address on the notice, by calling the number on the notice, or in many cases through the IRS online account system at irs.gov. If the letter feels overwhelming or you are not sure what to do, you have options beyond just figuring it out yourself. A tax professional, either a CPA, an enrolled agent, or a tax attorney, can respond to the IRS on your behalf. If you cannot afford one, the IRS has a free program called the Taxpayer Advocate Service, and you can reach them at 1-877-777-4778. There are also free tax assistance sites specifically for seniors. The program is called Tax Counseling for the Elderly, or TCE, and you can find locations near you at irs.gov or by calling 1-8009-06-9887. Here's something very important I want you to hear. The IRS does not call you and demand immediate payment over the phone. If someone calls you claiming to be the IRS and tells you that you owe money right now and must pay by wire transfer, gift card, or cryptocurrency, that is a scam. Hang up. The IRS communicates by mail first, always. If you receive a phone call from someone claiming to be the IRS and you are unsure, you can always call the real IRS directly at 1-8008-291-040 to verify whether any actual notices have been sent to your address. Now let me give you that checklist I promised at the beginning, because I want you to leave this video with something you can actually use. Step 1. Before you file your taxes this year, or before you review last year's return, make a list of every single account you have. Checking accounts, savings accounts, CDs, money market accounts, brokerage accounts, online savings accounts, and any digital payment platforms. Write down the name of each institution, then confirm that you have received a tax form from each one that paid you any interest or dividends. If you are missing a form, contact that institution and ask for it. Banks and brokerage firms are required to issue these forms by January 31st each year, and they can provide duplicates. Step 2. Compare the interest income on your tax forms with what was actually reported on your tax return. If you filed with a tax preparer, ask them to walk you through it. If you file yourself, look at line 2B on Form 1040, which is where taxable interest income goes, and make sure it accounts for everything on all your 1099-INT forms. Step 3. If you already filed your return and you realize something was missed, do not wait for a letter. File an amended return using Form 1040-X proactively. The IRS treats people who come forward on their own much better than people who only respond after getting caught. Penalties are often reduced or waived entirely when you self-correct. I want to be clear about something before we wrap up. Everything in this video is general information based on current IRS rules and publicly available sources. Your individual situation may be different. Tax rules can vary based on your total income, your filing status, your age, and whether you collect Social Security. Before making any decisions about your taxes, I always recommend talking to a qualified tax professional who can look at your complete picture. What I can tell you is that the information I have shared with you today is accurate and based on real IRS processes, and taking even one of these steps could protect you from unnecessary penalties this year. The IRS is not your enemy, but they are very thorough, and in a world where banks are reporting more information than ever, the best thing you can do is make sure your return reflects the same picture your bank already sent to Washington. You have worked hard for every dollar in those accounts. You deserve to keep as much of it as possible, and now you know exactly what to look for. If this video helped you today, please hit the like button and subscribe to this channel. I post videos like this regularly because I believe every senior in America deserves to have someone in their corner explaining these things in plain language. Share this with someone you care about, a spouse, a sibling, a friend who might have gotten one of these letters and does not know what to do next. You could be the person who saves them from a real financial headache, and if you have questions, leave them in the comments below. I read them, I respond, and your question might be exactly what I cover next. Thank you for being here, and I will see you in the next video.